Personalization has changed so much over the last several years.
Hmm.
It's an area where it's not what it was a couple of years ago, and
No.
Symend has had a big place in that. So why
Hmm.
don't you start off just introducing yourself and telling us a little bit about the company?
So Symend is a 7-year-old company. We founded it with a really basic premise, and it's really taken off more recently because of some major innovations that we've been the beneficiary of. But the idea was simple, which is that at the end of the day, big companies communicate with their end customers for a reason.
Hmm.
They're trying to relay some information, change their behavior, and make them take actions. The reason why they're trying to do those things is that ultimately, if you can do those things well, you're either going to make more money, improve lifetime value, or reduce cost.
Hmm.
So they're doing it for a business reason. Um, if that's the case, then behavioral science can play a really big role because it's really the science of, especially when delivered in a very personalized way, it's the science of nudging people towards an outcome and
Hmm.
controlling for the emotional coefficient of how they interact with communication. So we had a belief that, hey, these big companies have millions of customers to engage with. The reason why they're engaging with them is because they're trying to nudge their behavior because it's in their economic advantage to do so. So we can build a product where that behavioral science is delivered in a hyper-personalized way, nudges people towards those outcomes, and then gets better over time. Now, 7 years ago when we started, that was a very, very difficult job.
Hmm.
But over those 7 years, we had this belief, and I can't believe it happened the way we thought it did, um, that everybody was moving towards the cloud. People were centralizing their data in data lakes and data clouds. Companies like Databricks and Snowflake took off. And so an orchestration system that could take advantage of all that data and then leverage it into these personalized campaigns that get better with every interaction would become more and more possible for a large enterprise. So today we run like 400 million nodes a month. We work with some of the biggest companies in the world, and the impact that they can see very, very quickly from going to what we call a zombie campaign is like this one size fits all. You're not measuring, you're not learning, you're not getting better. You're kind of like, you're not personalizing, really, not truly. Going from that to this kind of like conscious engagement where you're understanding people for their human characteristics and then targeting them in a very prescriptive way with science. We've been able to deploy that scale for large enterprise, and we've been able to deliver really, really profound impacts, both in terms of like one of the things that's like people don't talk about in customer engagement, your goal is to engage less. If you have to have a lot of touches to get to an outcome, that's a terrible customer experience. The best customer engagement solutions should be able, instead of with 15 touches to get to the outcome, you should be able to get there with 3. If you know how to talk to people, you should be able to have an effective conversation with far few words.
Yes.
And that's what Cement ultimately can achieve.
The less friction, the more of a result that you're going to
Exactly.
get.
Exactly.
Okay.
Yeah.
And talk to me specifically about financial services. What does this market need to know as you get into a more amplified personal communication?
It's interesting. We started in telcos,
Mhm.
and there is a belief in financial services, mostly when we first started talking to banks and fintechs and lenders, that their business is completely different than telcos. We tried to convince them that, listen, some of the biggest lenders in the world are telcos that finance devices,
Mhm.
right? Like three of the top 5 banks in the world are actually telcos because of how expensive devices have become and the fact that they have to finance all those devices to be able to sell you a cell phone plan. So true enough, when you look underneath the hood of a telco, a lot of what they do to adjudicate customers, to assess them for creditworthiness, to give them financings on devices and stuff, all of that technology and infrastructure looks very similar to what a bank does to, for example, give you a mortgage or a loan or a credit card.
Mhm.
So that was our thesis going into the banking sector. It took some convincing to tell career-long bankers that, hey, what we did here and had a tremendous impact in telcos is going to work in banks. But once we got a couple of people believing and we showed them not only how big the impact could be, but how fast they could get to that value, it's starting to snowball now. The other thing that I've noticed is that because the innovation cycle in startup land with cloud and data and now Gen AI, the innovation cycle is accelerated so fast. Banks and financial services companies have become more willing to give up the idea of we can build this all ourselves and partner with startups and technology companies to solve their problem because the faster the economy, the ecosystem innovates and the faster innovation cycles are, the less likely it is that a company will be able to keep up with it if they try to build everything in-house.
Absolutely.
So their willingness to partner with technology companies just in the last 2 years has completely shifted, which again, companies like us have been able to benefit from.
So go into detail with me in what we have known as zombie engagement now, thanks to you.
Mhm.
And when you get into a true conscious engagement, what exactly does that look like, and how personalized is it?
So it becomes, so one of the things that we've always believed in is that you need to build, you need to start simple, create value, and make your life more and more complex in a data-driven way.
Mhm.
And so what that means is that typically when we start, we work with the customers, we understand what they're doing today, we help them set up based on all the experience and the 5 billion rows of data that we've already accumulated and all the insights and the existing IP and playbooks that we have on our solution. We map one of those existing playbooks to their needs.
Mhm.
Where the system really creates value is that the baseline is great. Our IP is great. The starting point is basically a synthesis of what they were doing, their brand, their values, and the IP that we already have on top of the platform. That creates the baseline, which is really valuable, but it's actually not the most valuable thing. The most valuable thing is starting with that baseline and then running these hyper-personalized campaigns and then measuring, because you're tagging everything along the campaign. Tagging things means that they're values. When they're values, it means that as you run a job, like a campaign, you're generating a ton of second-party data. When you generate second-party data and you flow it back into your data and analytical systems, you can learn and iterate in a very agile and high-velocity manner. That data, that cycle, and that feedback allows you to get better and better, but also more granular. So go from segments to micro segments to segments of one. So we never start with micro segments and segments of one. We get there through the data and the engagement from their base so that there's a high degree of attribution between the iterations and the optimizations and outcomes.
So when you say that we're doing this and it's part of the ecosystem where you're able to help the financial services
Mhm.
companies do this, tell me exactly what it looks like when working with Symend. How do you engage with the company and what roles are on them?
Yeah, that's a good question. So it really depends on the organization. So
Mhm.
we built a fairly decent size professional services group. The reason why we've done that is because we wanted to, what we learned as we engage with large enterprises is that there's two bookends and the truth is always somewhere in between. On the one bookend is companies where they have strong human capabilities in-house on even like they have behavioral science teams, they have data science teams and all these things. And what they really want is better tooling to enable and empower those groups. For those types of companies where they want very much to get into a self-serve mode, we still start by onboarding them, understanding what they want, and partnering with them to kind of fine tune the playbooks to what they're looking for and hold their hand a little bit initially up until those internal teams become power users. And then over time, we take a step back. So that's one model. It's like your professional services are really just onboarding and initial enablement, and then you're phasing into the background.
Mhm.
In other examples, it's like, no, we don't want to build up all these capabilities in-house. We want to leverage like all the experience you have from a global
Mhm.
setup. So we are going to not only are we going to leverage your professional services to onboard and enable, but to to be an extension of our internal teams and continue to support us in the learning and iteration journey. The truth is always somewhere in between. And sometimes people start with a full professional managed service initially. And then over time, they start to build internal capabilities or the priorities shift. And I've seen companies go self-serve, but then have reorgs and restructures. And so
Mhm.
now all of a sudden, because of that, they want to move to a managed service because they don't have the people in-house to do it anymore.
Mhm.
Or alternate the other way, which is they go for a full managed service at first, but then as they interact with us, they get excited, they get good, and their teams learn from our teams. And then eventually they're like, okay, we're good now. We're going to move the other way. So we built a delivery organization that could accommodate anything between those two bookends. because every company is a little different and there is no one size fits all when you sell to enterprise.
Spend a moment diving deeper into the learning and iteration. You're looking
Mhm.
at results, seeing if they were successful, and then deciding your next step on that. What in
Yes.
detail?
So normally what people do on optimization is think about it as vectors of optimization. You can optimize your segments,
Mhm.
or you can optimize the channel,
Mhm.
or you can optimize the message. And normally, because those are all discrete systems, like in a very deeply coupled low latency way, people don't look at it as a single system with multiple vectors of values, where now you're trying to optimize that entire like multi-dimensional layer of data.
Yes.
We don't do that. We optimize the entire system end to end. So instead of like this traditional A/B test, or I'm going to optimize this, because all of those nodes are interdependent. It's kind of like the butterfly effect.
Yes.
If you pull on this string, that you're not just optimizing that. There's all of these, poorly understood or not understood at all interdependencies on everything that happens upstream and downstream of that decision.
Mhm.
A simple example would be, hey, I've optimized the communication, but then I changed my adjudication and a bunch of people switch risk segments. Now, all of a sudden, the wrong people are getting the message.
Mhm.
So there's all of these kind of like interdependencies where if you try to string them out and optimize them separately, it doesn't quite work. So we basically built a system where everything that's part of building an end-to-end engagement playbook is optimized all at once in a multivariate way, which makes us fairly unique.
Absolutely. It's been a good conversation. Is there anything I didn't ask about that you'd like to add?
Well, a lot of large financial institutions are moving towards maturing their data posture,
Yes.
right? It used to be that a whole bunch of integration would have to happen from app to app to app to app. That's no like everybody's somewhere on this journey, but if you fast forward 5 years, 10 years from now, everybody's going to be probably at this correct ideal state, which is that apps don't talk to each other. All apps, there's going to be some sort of data management system or data cloud system, like a Snowflake, sitting inside of a cloud's instance like AWS or
Mhm.
Microsoft Azure. And then all the apps will connect to it and will feed it back, right?
Yes.
So there will be a back and forth ingress, egress flow to all the apps to the data layer, right? In this future world, and everybody's somewhere on that journey,
Yes.
right? It's
Yes.
not binary. So they start to break down the silos one by one.
Mhm.
Um, as companies mature their data posture, the next logical thing is, okay, great. I've I've harmonized my data. It's all centralized. Why did I do this? The reason why I did it is because I want to unlock the value of the data. Symend is a capability to unlock that value. And if you're on a path to modernizing, which means you're in the cloud, you have things like Snowflake,
Mhm.
onboarding something like a Symend is incredibly fast and easy, and is a horizon zero way of unlocking value and creating more revenue and saving costs. So if anybody's already thinking down that path and wants to try this, it's a very, very low risk, low friction way of trying and unlocking value. So anybody who's interested in that should definitely come talk to us.
I like it. Well, thank you. We look forward to seeing what comes next, and it's been a great conversation. We appreciate the insights.
Thank you.
Hope you have a great show.
Thank
Cheers.
you. Thanks.